This is a really important conversation to be having, especially because on surveillance, we keep talking about the divide between public markets and the underlying economy. And now it seems like it's growing in an increasingly dramatic fashion. And we keep wondering whether the economy is really struggling right now, at least by virtue of some of these labor market pictures, at the same time that you're seeing the oracles of the world do very well. Are you seeing that? Are you seeing the need for money to be a little more free now in order to juice some of that activity?
You know, we're not seeing it yet, but I do think the question you're really asking is, and it is the same question about, you know, with the amount, public markets used to be a great diversifier for portfolios, and it really was the bellwether how the U.S. economy and the global economy was doing. But as more companies have stayed private and more companies are funding privately, you really are questioning that barometer and what it's telling you. Torsten has a good piece out this morning talking about the concentration of the CapEx cycle and how it's concentrated in a handful of companies in data, AI, and technology. And while the CapEx is a massive number and it's driving a North Star to growth, you're asking a provocative question: is it really hiding the underlying economy, which is driven by private companies? 90% of the hiring in America is by private companies, and is that a different story today? It could be. We're seeing, if you look at the public numbers in terms of earnings over the second quarter, it beat consensus by 700 basis points, 11 versus 4. And for the most part, the credit portfolios that we oversee, the multi-thousands of counterparty risk, 3 to 4,000, it actually showed quality upgrades 3 to 1 versus downgrades in terms of performance. So in the breadth of our credit portfolios, we're not seeing a weakness. I will tell you, we definitely see more lingering inflation. And I do believe that while this administration is dead set on getting rates lower, I believe that there is a legacy inflation issues in the economy. When's the last time any one of us bought something in the last year and you said, wow, that was cheaper than a year ago? It has not happened. And that's just and I do believe that's going to be the scourge of this rate cycle, because I do believe there's greater inflation, and companies are having a much more challenging time passing that along to consumers. We're seeing it across the board.